The manufacturing sector contributes over 18% to Kenya's GDP. In the recently concluded BRICS summit held in South Africa, member states emphasized on the importance of value addition in this sector to increase its impact on the economy.
For the longest time, our economy was agricultural, nearly 25% of it is. But the largest segment of our economy is increasingly now services, telecommunication services, financial services, transportation services, retail, lots of service. But a core of an economy is production, so both agriculture and industry. So even if it is small, smaller than the others relatively, it is a solid source of employment. It is a solid source of growth. It's a solid source of revenue.
Kenya's stock market also presents a positive outlook for the sector. Key movers in the bourse are mainly in manufacturing and allied sectors, which represent over 10% of daily volumes traded.
Manufacturing stocks cover several sectors. We've got the cement, it's one of the most prominent. We have Athi river mining, we've got Bamburi cement, and we've got East African Portland cement. And the basis of and the key factors that drive these companies are really about demand for cement. And therefore, we're talking about infrastructure, we're talking about the property sector.
Though largely unexplored, Kenya's mining industry is robust with minerals. Oil exploration is currently underway in northern Kenya and titanium in the southern region. More reason why the manufacturing industry is poised to grow.
I think one of the greatest advantages which we have as a manufacturing sector is that our region is blessed with minerals. We have virtually every mineral, common minerals, precious minerals, metals. Now, the challenge for the manufacturing sector in our part of the world is being able to add or create value-added industries in our part of the world. It's the value-added industries which would create the job creation. It is the manufacturing sector and the value addition which takes place in the region which will create the jobs and achieve the Vision 2030.
Athi river mining is one of the manufacturing stock mover on the bourse, registering over 40% year-on-year growth in 2012, attributable to increased capacity utilization and operational efficiencies.
The good thing has been that the cement industry has been growing on an average by 15% year-on-year in Kenya and in East Africa region in general. Now, our investments have been directed at being able to supply the demand which is coming up from the region. We are the only cement company which has put up 4 cement plants in the region over the last 6 years. So in terms of capacity, yes, we have built in the capacity in the country. The demand in the region has supported us. The costs have been a major challenge.
75% of Kenya's electricity is hydro-generated. Over-reliance on this energy has contributed to increased cost of production.
If you're going to transform these economies, you need energy, and we don't mean lights at home. We mean energy to drive motors, but you can't, and you need to be able to do it competitively. Now you can't produce competitively if your fuel and your energy is very expensive. Now a lot of our energy in this region is based on oil, which is very, very expensive, and when the prices of oil go up, then it goes up some more. So it is critical that we start to look at access and secure access to much cheaper energy.
Energy consists of 2 costs. One is the power cost. Power cost is approximately 24% of our total manufacturing cost, and the other one is coal, which is about 28% of the total manufacturing cost. Now, power is critical for the operation of the manufacturing industry. It is critical for the cement industry, and therefore we need good quality of power on a continuous basis. In our part of the world, availability of power is a challenge, quality is a challenge, and therefore we have had to look at various innovative solutions to help us overcome the electricity power challenge.
Industry players are lobbying for provision of alternative energy sources.
Obviously, one of the things you try and lobby for government is to expand investments in energy, especially looking at cheaper sources. So pressure to expand facilities, increase the number of facilities, but increased facilities in giving you cheaper power. So the emphasis on geothermal is an answer to that increased capacity. But the second thing that you also require is quality. You need to improve the quality of existing energy.
East Africa's combined annual growth rate averages at 5%. A reduction in production costs will be pivotal to the growth of the manufacturing sector, which will in turn boost cross-border trade.
With cross-border trade, a lot has to depend on also the East African Customs Union, which has been a highly contentious issue, because there's a lot at play here. You're talking about having, getting your products competitively priced for competition and sale into those particular markets, where there are also existing manufacturers, maybe at different levels of capacity, but still there are manufacturers in those economies.
More investment in the manufacturing sector going forward will provide much needed jobs for Kenya's youth and enhance economic growth.